What's up, crypto legends? In this episode, we are talking about the most important levels of support that need to hold on Bitcoin on the higher time frames, just in case we do get a larger corrective move. Of course, more internally, the $69,000 range is support. I'm going to explain some trading setups, and also what if the price starts bouncing from here and starts claiming those highs created yesterday? What would be the plan? This is what we're going to talk about in today's episode. There is billions of dollars still of short liquidations above $72,000. We are going to talk about some very interesting things that is going on worldwide, guys, so make sure to stay tuned. Just a quick reminder, my favorite crypto trading platform is Bybit. You got an insane bonus with the link down below in the description, 20% fee reduction and $30,000 worth of deposit bonus. If you cannot trade on Bybit, you have these exchanges such as Bluffing and 𝗕𝗶𝘴 that are no KYC, and you do have exclusive bonus as well on those exchanges. Now let's go right away through the price of Bitcoin and focus here on this time frame, which is the 1 hourly time frame. So we've had a little bit of a cool off. Why did we get resistance here from this point? Well, I'm going to explain it right away. We were just hitting a daily level at that point. Let me just zoom in onto the daily level and get that daily level marked up. I just got it off the chart so you can see why this level was so important. It's basically the daily close here and open that we had on the 8th and 9th of April that was just tested. These daily levels are extremely important and they do act as resistance and support. So let's go right away and mark that level so you can actually see it. Daily close and open just retested and getting the pullback. But not only that, we were hitting a major level of resistance as well, which is the value area high of this trading range of March and April. You can see here how also we were hitting that level. So we are getting a little bit of a reaction here during the last couple of days, getting a few $1,000s of a pullback. Can we form a higher low at this point? That is the question. I'm going to explain that scenario in the next coming minutes. But just so you understand why we got rejected here. Value area high of March and April, daily level. If we do take that Fibonacci as well from the all-time high to the pivot low of the 1st of May, we're just tapping the 0.88 Fibonacci also in confluence with the daily and value area high. So no doubt we know why we're getting rejected from that point. Now, there is a bearish case scenario as well. I want to share this with you. You probably saw it on yesterday's stream, but it's a butterfly pattern. Okay, this is very symmetrical, also hitting this exact 1.41 Fibonacci level here from the expansion of X to A. This is also in confluence. We are not going to get too bearish just yet, okay? But this is a main resistance zone at that daily as well, with the value area high of this range and the 0.88 Fibonacci from all-time high to the low of the 1st of May. So there's a lot of confluence, a lot of patterns here. You know, this is main reason why we're rejecting from that $71,500 area. But we are holding support. What support? Well, basically, when we take a look at the price action here from this consolidation, we had the weekly naked point of control. When we do get the fixed volume profile as well at that range, you know, we do have a high volume node. This is where we are currently holding right now, as you can see, at the 69,300 to 200 range. This is a strong level of support and we want to maintain it. When we get the fixed volume profile of the entire range, or the VPVR, okay, the volume profile of the entire level, we can see that we are actually above value area high of the entire range when we count May. When we get the VRVP volume profile, we can clearly see that there is a high volume node at this area. This is basically where the price is holding. We would not want to lose this level because our next largest level of support would be $67,000. That was the point of control of March and April. Okay, we did get massive resistance at that point here during April and during May just last week. And we should be holding this level insanely as support. This level over here is extremely to hold because if we do lose that $67,000, things can get very messy. We could be going to much lower levels, even targeting the value area low of the entire range of March, April, and May. If we are going to lose this level, no doubt it's going to be a sign of weakness, and I would be looking for a much larger corrective move. This is going to be looking quite bearish because this impulsive move that we've had during the last few weeks will no longer look bullish. If you're starting to break this level and you're overlapping here the first wave, you know, this is not bullish. You will not look at this to do something like this. You look at the price action to actually start moving to the downside as you losing crucial support levels. That is the bearish case scenario. Let's talk bullish because the market is bullish. We just had a small little pullback. Let's talk about those major levels of, okay, bouncing zones on lower time frames. Well, zooming in on the 15-minute time frame and analyzing this, you know, local uptrend that we've had during the last few days. Let's get the volume profile out of the way. And I'm going to talk about Fibonacci retracement, okay, from this pivot low, which is from the 10th of May. You can arguably discuss that this is one entire wave here to the upside. We are just hitting the 236 Fibonacci, okay, very, very strong support at the moment. And when we take a look at the latest impulsive move in between Sunday and Tuesday, from this level here to the highs, we are holding the 382 Fibonacci, almost coming down to the 50%. Now, I prefer this Fibonacci retracement. This was explained also on the live stream yesterday. If we were to get this dip below the 50% Fibonacci, claiming that higher low that was created on Monday, which is also where we have the high volume node, all right, from April, naked weekly point of control. If we get a sweep of the lows of yesterday, okay, also early this morning, also the higher low from Monday, get that sweep, hit 50% Fibonacci at 68,965, and we fail to move to lower levels as we're getting backed up by that naked weekly point of control, no longer naked, but it's a solid high volume node on the volume profile from April. We are likely going to get the recovery. However, we need to see the price faking out, okay? Not successfully moving down. I'm not interested in long positions as we are beneath the level. As we do get that level hit and we recover, this is going to be looking pretty good. Good sign of weakness of the bears, and we could be off to the races in between today and tomorrow, all right? All the way back to the highs. What would be another scenario? Of course, the price starts to recover here. We are holding major support. We already got here a pretty nice corrective move. When we do analyze here on Elliott Wave Theory, the latest move, we can see here in between Sunday and Monday that we formed really nice 5 waves to the upside from this pivot low, right? We can see right there, 1, 2, 3, 4, and 5. And we also formed an ABC corrective move right over here. Also, this ABC corrective move has hit the 1.618 extension, very common as well as for a C wave, right? This C wave on the ABC, very common, 1.618, 69,200 range, very nice. This could actually recover from here. The question is, right now, what is going to happen if we come all the way up to the highs? This is a possible swing failure pattern, not going to lie. When we've just tested a high for the first time, I consider a swing failure pattern double top. We can see one right over here. We can also see one right over here. But if we do get a third test, all right, with time creating higher lows, I am not interested, okay? So the first touch as a swing failure pattern is very much acceptable to get a pretty nice decent pullback of several $100s. This is a good day trade, okay, scalp short position. No doubt that we're likely going to get a pretty significant rejection from this swing. If we do create a swing failure pattern, we could just blast through from the level as well. But if we reject, I would consider a quick little short scalp, okay, to take profits, you know, at the support levels such as the VWAP. If we do see VWAP climbing up here, if we do get those pumps in the next coming hours, it's going to be a target zone for that swing failure pattern. If we do get that swing failure pattern and we retrace and then we recover back up to the highs, I will no longer look for a short trade over here on a third retest, okay? This will be just forming higher lows, building bullish momentum, and you're just likely going to smash through the highs, and we're probably going to have an attempt to go to all-time highs. Let's take a look here at the liquidity. We have billions of dollars of short liquidations above $72,000. So we got 72.6, 73.2, 4.4 billion, 73.5, 3.9 billion. There's just billions of dollars of short liquidations at the all-time high zones above $72,000. So no doubt there is a chance that we could see that momentum to the upside. let's go right away with a bit of news. Vaneck has officially listed its spot Ethereum ETF on the DTCC, trading under the ticker symbol Ethereum V. So they are getting ready. We know that we do have a few deadlines, okay, in the next coming weeks and even the next coming months. Ethereum spot ETF, if that is going to be approved, no doubt I would expect Ethereum actually smashing through all-time high just a few weeks after the approval. We have also liquidity continues to flow into the crypto market. So liquidity is actually coming into the crypto market. We are seeing some altcoins that are lagging behind a little bit. I do expect them to recover in the next coming days, especially if Bitcoin does behave. We need to see Bitcoin behaving. If Bitcoin gets a drop of $5,000, no doubt that the altcoins are going to get a hit, so we want to stay defensive on some of those altcoins. Bitcoin holders are increasingly inclined to hold rather than sell. This suggests that Bitcoin is now viewed more as a store of wealth than a trading asset. So the people that are buying Bitcoin are holding for longer and longer. This is extremely bullish for the mid-long term. Donald Trump presidential campaign officially accepts Bitcoin and crypto. Donald Trump for president, guys. Let me know in the comment section if you would be voting him. Now we have BlackRock buys 4,170 BTC. Second wave, it's happening. We've been pretty flat during the last few weeks on the inflows from BlackRock, and now we are starting to see some very aggressive inflows the last couple of days. So it looks like we're just going to continue to the upside, which is obviously very, very bullish now for the next coming weeks. And we have $1 billion of US dollar Tether just minted again. They have been minting like crazy during the last few weeks. And this is obviously very good. When the money printer goes on US dollar Tether, it means it is going to be deployed in crypto. So overall, looking quite bullish still for the next coming weeks. Legends, thank you very much for joining, and I will see you in the next one.